What's going on? Billy here from Storm Trades with another trade recap. Today we're going to run through my short trade setup I got on CL on Thursday, August 21st during the AM New York trading session. I had a neutral daily bias on this day, but I did see a clear change in the state of delivery with some nice targets below, looking for sell side on the hourly time frame. And we'll go through another trade that we could have taken once the 1/3 ADR level was swept, along with some high time frame liquidity, a reversal trade back to the buy side. But anyway, let's get right into it. We have the last 4 daily candles on the chart right now. I'm going to set up the daily chart the same way I do every single time. Let's mark out the previous daily low, previous daily high, and I'm going to run a fib from the previous daily range. Now, we always want to work with the assumption that price is going to be moving from external range liquidity back to internal, or from internal back to external. Price can also move from external to external. It's really just all about liquidity, right? So do we have any external range liquidity that we are currently engaging with, delivering from? And we do. We have a swing high up here, okay? Now, that said, I also like to look at candle structure. So the previous daily candle was extremely bullish and closed extremely bullish over the, so this was Wednesday's candle, closed extremely bullish over Tuesday's. So it's not really one-sided to me, right? When I'm looking at the daily bias, and I spent a lot of time on this, okay? I really want the daily bias to be like a no-brainer, and this isn't really a no-brainer to me. It looks like we had a very strong close up there. I would expect price to, if price was going to go higher, I would expect price to have a low, an open, a low inside of this area, and then a high, and a close, obviously. So because we just swept this really important point of interest, but we had a very strong candle close, I was sort of thinking that price could also come back down here. We also had a swing low that was traded into and traded away from, right? So kind of being sandwiched between two POIs whenever that's happening. Obviously, we have a swing low down here now. I just wasn't clear. And if you're clear by looking at this, then maybe you see something else, and that's cool, right? Nobody's wrong or right when it comes to this. I'm just talking you through how I'm thinking about my analysis as I'm doing it. So when I have price like this, price can move up and down, in my opinion. So I'm neutral, no big deal. I'm moving on to the hourly time frame, and I'm seeking out the most recent change in the state of delivery. And does that make sense in the context of the daily bias? Okay, so let me pull up the hourly chart, and we have it right here. I'm just going to pull this away. All right, now, interesting, right? What do we have right here after sweeping the swing high? Okay, what do we have? Right, we have these series of up-close candles that took this major liquidity, and now we've had strong close down below it. Okay, so this right here is a, hold on one second. This right here, okay, we also have a liquidity raid, right? So we have a liquidity raid, and we have a strong close down below the series of up-close candles. So this is the change in the state of delivery. Now, I want to make note of something. You see me talk about the 1/3 ADR all the time, going on and on and on about it, because if we get a sweep like this, okay, if we get a sweep like that, and then we have a change in state of delivery, I'm now looking for a move down to the other side of the 1/3 ADR. And I'd like to see that we have a decent amount of room to run, okay? Now I'm going to run a fib here, see if there's any liquidity that lines up both with the 1/3 ADR and with some relevant standard deviation levels. So we know that price typically wants to hit the low-hanging fruit, which is some liquidity around the -1 to -1.5, right? That also lines up here with the Asia low, right, which is another important liquidity pool. I just had it on here, but the very next liquidity pool down here that lines up with the 1/3 ADR is an hourly swing low. Okay, so I've got a lot of nice juicy targets. I love looking for price to come down and tag the 1/3 ADR. Whenever you see price like this, okay, that means you've already missed the reversal, which is okay. Okay, the reversal happened over London, no big deal. I'm now looking for some of these low-hanging fruit targets to hit. So I'm going to move down to the M5 time frame and start looking at what we have here. Okay, I'm going to clean this up and mark out this Asia low and mark off this hourly swing low. Okay, and that lines up real nice with the 1/3 ADR. Right. So now let's follow price from the top. Okay, we have a change in the state of delivery. Price is fractal, so all of this is going to be happening, right, at the same time. So we had a change in state of delivery after taking what? The London high. Very important liquidity pool right here. So we took the London high. Hold on 1 second. That's the London high. All right. There we go. So change in state of delivery, and this is confirmed, okay, by the fair value gap that's right here. We don't even come up and trade into that. So whenever we don't have a fair value gap that doesn't get traded into at all, right? In this case, it's a sign that we are in fact very bearish, right? So whenever we are in fact bearish and we've created the smart money reversal, and we did that at the London high, and we swept the 1/3 ADR. Okay, I'm going to start taking a look at potential continuation setups. And I get those by following price and seeing where price enters in some sort of internal range liquidity, okay, like we did right here. And then I'll mark off a series of up-close candles that took that liquidity. Once we get a close below that, okay, I would look to get on side with the trade. Now, this happened at 8:25 a.m. I don't start trading this pair until 9 a.m. So here we are again down here, okay? We've entered into another. Now, when you're bearish, okay, and price is clearly bearish, you're going to come up into liquidity pools, right? Excuse me, M5 fair value gaps in this case, right? Internal range liquidity, and you're going to get a dump after that. And we're going to see every up close candle, series of up close candle that took that liquidity. We're going to see it get closed through with displacement, okay? Especially if we have nice targets below. So I'm going to mark off this series of up close candles, and right at 9 o'clock, okay, was able to get into a trade. Now, I'm just going to market order here, but I did get in actually at this I market order, but I actually did get in at the order block here. But just for purposes of showing this trade, I'm going to market order right here. Okay, there's a sell, and my stop loss was actually above this M5 fair value gap. I suppose I could have put it above the swing high here, but I just wanted a little extra room, as I thought price could get all the way down here to the 1/3 ADR level. I'm going to take profit right there at the 1/3 ADR, knowing that price will most likely move to the hourly swing low, right? So let me push price lower. All right, so price took Asia. Now we had a strong close through Asia. Now watch as we have another setup, okay? We have another M5 fair value gap. And we mark off the series of up close candles that took that, and show you where we actually could have got in at another continuation, right? So I would have got in right here, okay? Could have moved this risk down and gotten in right here. Let me just show you what that would look like. Okay, I move this down to there. I'm going to add a contract, okay, and keep the take profit where it is. Here we go. Now, let's take a look, okay, at the potential reversal trade, and I just want to make you aware of where it happens. Okay, so take all this off of here, all this off, and I just thought this was kind of cool. Okay, I did not trade this. I traded that short, and then I turned off my computer, but I just wanted to show you, if I was interested in longs, how this 1/3 ADR combined with a higher time frame liquidity pool really provides for some amazing reversals. I mean, look at this. We swept it up here and then dump. We are about to sweep it right here. Look at that. Bodies staying over the hourly swing point there. And I'm just going to go ahead and mark off this series of down close candles. This would be the change of state of delivery if we got there, right? So on the very next candle, we're getting close. Very interesting. All right, now I'm going to make note that this is a series of up close prior to the move that went down. This is a breaker block with a fair value gap in the middle. That's now a unicorn, okay? So if you were to get in on this unicorn, you have the change in state of delivery, you have the fair value gap, okay? You have this sweep of liquidity here and the sweep of the 1/3 ADR. If you wanted to take a seat, like we've already had a bunch of moves today, right? We've gone from 1/3 to 1/3. I wouldn't expect price to come all the way back here to which is most likely the high of the day. So I'll take a look at the midpoint of the daily range and say, okay, can we take a trade up to the 50% of the daily range? We probably could. I'm going to take a 2R trade here. Again, I didn't take this. This is what happens when I go over my my pairs at the end of the day. I want to see what else I could have taken or how price reacted to certain liquidity pools. So had we got in here, they buy order, stop loss below the breaker block, with a take profit at 2R, which coincides with the midpoint of the daily range, and boom. Okay. I thought great price action on CL today. If you guys got anything out of this at all, I appreciate it. Like, subscribe, smash the like button. I love comments, and just appreciate anybody who watches these videos. You guys have a great